going to give a quick run through of CMI Limited, which is ASX CMI. It's basically a supplier of capital goods to mining, construction and automotive industries. Its two main segments are one, CMI Electrical. So they're basically involved in the manufacture and distribution of electrical cables and components for the mining and industrial sector. They're also involved in construction as well, but that's a lower margin business. The second segment is TJM. Essentially that's a consumer goods business involved in the manufacture and distribution of four-wheel drive and SUV accessories through nationwide TJM stores. It's a fairly cheap company with current earnings at 15% of its market cap and a relatively high net tangible asset per share with practically no debt, and the fact that it's an easy business to understand is appealing. So in terms of the key drivers for CMI, obviously the future of the mining sector is important because how it sources its growth from its main segment, CMI Electrical, is through capital investment in the mining sector. So naturally it'd be worth looking at the growth in the mining sector and whether or not there's significant capital inflows from overseas or domestically. From the other side of its business, TJM, that performance is actually at the moment in the negative. It's currently producing a loss, but that follows from a lot of restructuring that has been going on with that side of the business. In fact, just from the annual report alone, they were saying that they'd finished the restructuring this year and they were expecting to turn a profit in the next year or so. And market trends do see an increasement in non-mining sectors, so that could be, I guess, favourable for the TJM performance of next year. In terms of potential downsides, a bit of food for thought is the fact that the share price does seem to follow exchange rate fluctuations, which might follow on from the fact that exchange rate fluctuations are largely influenced by capital inflow to the country, and more specifically the mining boom that has been occurring over the past 4 to 5 years. Now obviously current trends are indicating that the mining boom is slowing down as they enter into production and export phase as opposed to capital investment. So at the end of the day, this company is fairly risky given the current trends of the market, and also the fact that there is a decline in the high margin business CMI Electrical, and the fact that TJM hasn't proven that it's actually turning a profit as of yet. But nevertheless, given the fact that it's a fairly cheap company and fairly easy to understand, it would be worth taking into further consideration.